Hello traders worldwide, welcome back. In this video, I'm going to actually show you in details how to read market structure the right way using the range theory. Now, a lot of you have this problem of not knowing the exact time to buy when the market is bullish and when to sell when the market is already bearish, right? So I'm going to actually show you on my screen right now how to know using the range theory. Let's go into my screen as I show you. Now, if you are used to your market structure and new range, or this is the very first time you're actually coming across this particular trading style, pay detailed attention. So this is how your market structure looks like, conventional market structure, right? Conventional market structure, it looks like this. But I'm going to tell you, the market does not really move like this in this basic form, right? It usually creates inducement or what we call internal range liquidity. So I'm going to knock this off or just shift this aside so that we talk about the business of today. Now, this is how real market structure usually looks like. Are you see? Now, take a good look at this. From the basic, this is our breakout structure. Let me put this in a black color, or let's put it in green. All right, let's put this in green. Signifies a bullish market order flow. So this is our breakout structure, right? Good. This is the basic, the one you are used to. This is basic market structure. And usually when the swing high is broken, we create a new high. So primarily, this is what we call BOS. It's another BOS here. Another BOS right there. Right now, on the same spectrum, look at this. This is a BOS here. This is a BOS. This is a BOS. And here is a BOS. I have another BOS right there. Now, take a very good look at these guys. Look at. For the basic, there's no inducement. But for this, we have what we call an inducement, and we have new buyers stepping in. I'm going to explain. Right now, at this point, this is another block right here. This is another block. You see how price reacted from it, right? From this point again, you see how price reacted from it. Now, the reason why price is reacting from here, from this other block, and continuing the order flow, I'm talking about this. The reason why price is reacting from here is simply because the volume here, right? The volume, the buying pressure here is higher than the one here, because here is also another block, this extreme zone. But the reason price is reacting from here is because one, the volume or the buy volume from here is pretty high, meaning we have a lot of buy orders sitting around here. And you can see how price gave an inducement and came here to tap into it before moving to the upside. Now I'll put this here now, inducement. IND. Let's put it as inducement. Put this 8. Now I'll put this as inducement. Price comes here and mitigates. Now, usually, that's step one. That's number one reason why price reacted from here. There's an inducement, price reacted here, boom. And because there's high volume here. Now, usually, why price will react from there is because there is little or no imbalance here to be filled, no valid supply. In fact, this is the major reason. There is no valid supply here. Okay, there's what we call an efficient range. So this is an efficient range, no valid supply. Can you see? No valid supply. So price has nothing to tap into here and come down. Are you getting me now? Whenever you see a break of structure, the retracement downwards, break of structure, the retracement down, make sure that you don't see fair value gaps, big fair value gaps or supply. The moment you don't see supply and you see an inducement, just know that this zone where you have new buyers is actually going to stand. Price reacts from here, gives a change of character, can bet you we are going all in. Right? We are going all in. And then the other flow continues. The other flow continues. All right? We have a break of structure. The other flow continues. Now, we are not going to be using this point, this extreme zone, as our what? As our order block. No, we're not going to do that. We're not going to do that. This will now be our new range that we'll be playing with. Here to here will be our new range that we're going to play with. Okay, we have no business coming here because price has shown us that it wants to continue buying from here. Now, this is our new range. Our new range will be from this point to this point. So now look at this very clearly. Are we seeing any price action that shows that there is imbalance? Are we seeing that there's imbalance? Let me put this very well so that it becomes now, if we see that there's no imbalance to be filled, meaning there's no valid supply here, we now have enough evidence that when price comes down here, creates a change of character like this, we can start buying from here. Okay, a low risk buy, we can start buying from here because there is no what? There is no supply. But in a situation where we have something like this, the situation where we have something like this, an unmitigated supply, pay detailed attention to what I'm doing now. Unmitigated supply. Even if price comes back to make a change of character here, the fact that we have an unmitigated supply here, there's every tendency, not all the time, but most of the time, there's every tendency that price will come here, collect these orders, and then come back again. And then come back again to come and, let me adjust this, come back again to come and take more to sweep this low. Now, this is showing you now that this area where you have new buyers is not going to hold because it is already showing you from here that this supply is active and is willing to sell market to the downside. So our new point of interest will now be here. Our new point of interest will be here, this extreme zone. Remember, we are working with this range. Our new point of interest will now be here. So if price comes here and now breaks structure, this is where we now have our change of character. So ultimately, we now start what? Selling. We start what? Selling from there. Now what? Sell from this last supply, and then all the way to the downside. So this is how market structure works. This is how valid market structure works using the range theory. Okay, you must have a new range. Now let's go straight into a new chart. I want to see, I gave a signal on BCH, amazing signal, and that signal has, BCH. Let's see. I gave a sell. So when a lot of persons were buying, I was already selling. Yeah, you can see I already mapped it out. This was a signal I gave some days ago. Yeah, how did I take this trade? It's very simple and clear. It's very well simple and what clear. I already knew this was going to sell. Even if we had a break of structure here, I knew this was what it was going to sell because this was the last demand. This was the last demand that created the break of structure. Right? Price just broke through it directly. It did not even waste time. So I already knew we were going to sell from there. I gave another signal on Ada. I knew this was also going to sell. I knew this will sell big time. Now, look at it. See the break of structure. Let me put this on 1 hour so that you see what I'm saying. Put it on 1 hour. Good. What about valid point of interest here? Price mitigated it, right? Perfect. Now, what did price do? If you go to 2 hours now, you're going to see that we have this demand here that's unmitigated. Put it on 2 hours, let's see, or a lower time frame. I know there's a supply rather. There's a supply somewhere around here. See it? The supply around there. Perfect. Last bullish candle before the bearish move. See it? There's a supply there. There's a supply. And look at what price did. Price tapped into this supply and what started moving. Now, something also happened here again. Can you see this? Mechanical approach. Something happened here again. There was a flip zone here after price what reacted. So this is telling you that it's a distribution. Look at the flip zone. The same thing happened in lower time frame. Look at the flip zone. Look at this other block. Another block was here. Price reacted. Price reacted from here, went up, and then fell drastically. And then all of a sudden, price came back here to this zone again to retest it, and then it started falling. So now we are actually going to be selling. We have no business buying again. We have what? Absolutely no business buying this market. So all we need to do now, we have our supply zone here. We have our break of structure to the downside. Now, the valid supply I can see here is right here. This is the first valid supply. So we're going to wait. We're going to wait for price to retrace within the week. It has an inducement already. It has an inducement. So I am going to wait again. You can take this as the inducement. Inducement, first leg inducement. And I will sell from this zone. I'm going to sell from this zone. This is valid supply. Sell from here. This is where, let me remove this other block. This is where I'm going to be selling from. Okay, I'm going to be selling from here. Then sell all the way down to the next swing low because this is going to fall. It's going to fall very, see, we have low risk buy here. Look at bunch of liquidity resting here. All these guys will be taken out. All right, all these guys are going to be taken out. So my next, this bullish move here has no inducement. So it's either price is going to come into this range, price will definitely come into this range. So to be safe, we can say, okay, TP1 here and TP2 here. But basically, this is what price is likely going to do. We already have our BOS, everything is set. We have our supply. Except price decides to engineer a new supply here, but if price doesn't do that, we have our supply here to come mitigate, and then taps us into the trade, and boom, we're good to go. All right, so babes, that's just it. See you guys in the next video. Don't forget, hit the subscribe button, share this video with your friends. Let's keep making money together. One love.